Hello and Happy New Year. I'm Rafia Hassan, Chief Investment Officer of Wipfli Financial Advisors. I wanted to take some time today to share some highlights on market performance in the fourth quarter and for the full year 2020. Markets experienced a very strong quarter and a remarkable year. The number of historic events that took place in 2020 seemed like they could have taken place over a decade or more. We had, as everyone knows, a global pandemic, lockdowns across the globe, and a contentious US presidential election, to name just a few of the events that took place. On the bright side, in the fourth quarter, we also received very positive news regarding 3 vaccines to fight COVID, additional fiscal stimulus here in the US, as well as clarity regarding a Brexit deal in Europe. So let's start by taking a look at returns across major asset classes in the fourth quarter. On the equity market side, we had a very strong finish to the year. Overall, the US market was up close to 15%. International markets actually outperformed the US market. And so we saw international developed markets up close to 16% and emerging market stocks up the most 20%. On the bond market side, fixed income credit spreads actually narrowed and riskier segments of the bond market outperformed. The US bond market, which on this chart is an index of investment grade bonds, was slightly positive, up 0.7%. Emerging market bonds, which are considered riskier than US investment grade bonds, performed well and were up 5.8% for the quarter. Now let's turn our attention to the full year 2020. So on this chart, we can see in gray the returns for the full year 2020, and in dark blue, the returns from the fourth quarter, some of which I just reviewed on the previous chart. Within equities, small cap stocks were the best performing asset class in the fourth quarter, up 31.4% in Q4 alone. They were also the best performing asset class for the year, up 20%. US large cap and emerging market stocks actually followed small cap performance, up close to 18% for the year. And then in international developed stocks, we saw the laggard or the worst performance for the full year 2020, but nothing to sneeze at, up 7.8% for the year. Within fixed income, while we saw credit spreads narrow and lower quality bonds outperform in the fourth quarter, over the course of the full year 2020, investment grade taxable bonds were actually the best performer, up 7.5%. That was followed by high yield bonds, which were up 6.3% for the year, and then emerging market debt up 5.3% for the year. Municipal bonds were the laggard among the bond market returns, up 4.2% for the year for intermediate term munis. So looking ahead to 2021, a return to more normal economic activity really hinges on successful vaccine rollout and distribution. Although the pandemic triggered uncertainty that was cast upon the economy won't disappear with a new calendar year, the most important lesson we've learned this year is that maintaining a long-term perspective and sticking to a well-constructed investment plan helps position investors for success in their financial journey. As always, if you have any questions, feel free to reach us at wipflifinancial.com. Thank you.